senior trader with daily fundamental analysis. So, sorry for the light, but here is the spring coming and the sun with it. Okay, let's take a look at what is happening around the major currencies and around the globe. The euro United States dollar is trading at 1.3031, off by 21 pips. The euro gave back earlier gains as market prepared for today's ECB meeting, where interest rates are expected to remain on hold at 0.75%. However, there is a wide debate about President Draghi's tone during the press conference. As the currency bloc's economy continues to falter despite Tuesday's data, risk rises that ECB will ease policy in coming months, if not this week even. Traders can expect the ECB to ultimately turn more dovish. Hopefully it occurs in April and not today. Comments on the Italian election are likely to focus more on the markets, encouraging reaction. So 10-year Italian yields are well off last week's highs, as opposed to the vote uncertainty over reform. And yesterday's fourth quarter GDP was weak, falling even to 0.6 quarter and 0.9% year. However, however, it was not enough weak to steer an immediate response from the inflation-focused ECB. So, and to Great Britain, the GBP USD edged down by 53 pips to trade at 1.5074, giving back gains from Tuesday as the greenback regained its footing. So the Halifax Housing Price Index reported above expectations, but had very little market effect. Yesterday, Governor King was in front of Parliament discussing prudential regulation, and the GBP is weak but well within its 8-session 236-point range on 1.4986 to 1.5222. Leading into today's interest rate decision, where the Bank of England is expected to leave the bank rate on hold at 0.5%, but there is a widening divergence in views of the possible expansion on the asset purchase program. For the GDP, this is unlikely to shift the strong downward trend. Through there might be a brief GDP upside, knee direct reaction today. Sterling was boosted on Tuesday after Britain's services sector grew more than expected in February, offering a glimmer of hope that the economy may avoid a triple-dip recession. So this prompted some in the market to believe the Monetary Policy Committee would decide not to restart its asset purchase program. But some strategists still think a string of poor data in recent weeks and comments by Bank of England policymakers signaled that the bank was ready to take steps to stimulate the economy. To Japan, United States dollar and Japanese yen dipped 9 tips to trade at 93.20, remaining its multi-week range but easing towards the lower side. The Japanese yen gained momentum as traders moved to safe havens after the sequestered budget cuts in the United States weighed on traders. Markets are closely watching this week's Bank of Japan meeting. The greenback has eased traders were in a more positive sentiment now that the budget cuts are behind, with no disasters, with the Fed's Bernanke continuing to endorse ongoing easing to help the economy pass the budget cuts. With Prime Minister Shinzo Abe determined to join negotiations for the Trans-Pacific Partnership Free Trade Pact. The focus has now shifted to how much deregulation Tokyo would have to sacrifice to Washington in the automobile and insurance sectors in exchange for the protection of Japan's politically sensitive farm products. It would be interesting. This move could well support the Japanese yen and all the economy. So traders are closely watching how Prime Minister Abe plans to help the economy recovers besides huge monetary stimulus programs. So this pact could be an exit. So back to gold. Gold gave back earlier gains to trade at 1,574.30, almost flat for the day, underpinned by expectations central bank would maintain ultra-loose monetary policy, but struggling for fresh gains as investors favored high yields assets. So strong stock markets grabbed the attention of investors, with European shares hitting their highest since the 2008 collapse of Lehman Brothers on Wednesday, on hopes central bank stimulus would spur a broader economic recovery. The ECB, the Bank of England and the Bank of Japan all are expected to stick to ultra-easy monetary policy at meetings today, following assurances by Federal Reserve officials that the stimulus program remains in place. Well, that's all for today. More details you can find on our site again, www.grandcapital.net. And for now, have a nice and profitable day. Goodbye.